Okay, welcome everyone. Thanks for joining in today. As you know, this is the FS Street Tokyo Open Live Room. I hope you are well, and I hope you had a great day. Let me share with you the slide here. So welcome everyone. Welcome to the FS Street Tokyo Open Live Room. This is a daily show in which we feature real trading, as you know, at the very heart of the Asian session with me, the FibStalker. Thanks for joining in today. This is a daily show from 7 p.m. to 7:45 p.m. I'm gonna open the chat and I will have some information on the chat as well for you, just in case, so we can avoid, or I can avoid, some of the issues we had yesterday. So thanks for your patience and thanks for being here. Just a moment here to open the chat and then we're going to start. All right, and as you know, this is a daily show. We start on Sunday. On Sunday we do a longer review. Thanks a lot for joining in, and we have let me join here as well. Flat and Fundo, Kerry, Jake, Greg, Matthew, Roland, a.k.a. Marco, Todd, Scott, Desi for helping us, and Adinda as well for helping us with this show. Thanks a lot for joining in. We have Todd, a.k.a. I don't know if there was a previous comment there. Thanks for joining in. So I will, as we wait for others to join in. Hello, Marco. Hello. Lucky you are in Italy. I was there last 2 weeks, and the weather was absolutely great. Hello, Marco, Kerry, Todd. You're short in euro pound and euro dollar. That's not too bad. We're going to review those, both of them. Todd. Hello, I'm Fondo. I saw your message on Twitter. Sorry for yesterday issue with the chat. I think it was solved at some point, but was not able to have it on my desktop here. So my apologies for that. Hello, a.k.a. Scott. Can only dream of Italy now, lol. Scott. Well, you can dream of it, but you know, if you would be wildly successful in trading, you know, that dream might well become reality, Scott. So that's my wish for you. All right. So as you know, in order to become terrific and successful in trading, we need to mind risk. That's the most important thing, as you know. And I'm very serious about risk management. I would gladly give profits away, or a portion of profits away, in order to manage risk, and I do this consistently. Indeed, this is built into my own trading, because what I do, I manage risk by trying to get a risk-free trade as soon as possible. At the beginning, it's a full risk trade, but whenever I have the opportunity, I try to bring that trade to a risk-free status. Now, as you know, trading Forex and its derivatives, futures, options, CFDs, and other instruments with retail of exchange transaction involve substantial risk of loss, and it's not suitable for all investors. Hello, a.k.a. You may lose all or more of your initial investment. That's not for you, K7. This is just a disclaimer that I'm showing here. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. All right, and you know these things very, very well. Please also review the FS Street risk disclosure on the website, and please also review the new FS Street website. The more I look at it, and the more I get excited, and the more I like it. So I hope it's the same for you. And of course, I mean, it takes a little bit of time to get used to it, but I think it's going to be great. And it's easier to find information anyway, and the live videos and all the other information you might look for. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decision. Indeed, all the information I provide in this webinar it's merely provided for general information as well as educational purposes. You know, I'm huge, well, sorry, I shouldn't say that. I'm big about education. I also have a coaching program, which is going to start on May the 6th. The information and opinion expressed do not take into account any particular individual's investment objectives. Okay, so I, Giuseppe Basile, FibStalker Consulting Inc. and FS will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, so welcome Pantelis. Hello everyone, welcome Jake, Scott WA, AA, and all of you. I like to read the disclaimer. This also gives us a little bit of time and let more and more people to joining in here. All right. All right. I also want to say that whenever you have any problems with chat on the old website, you can go on the page and there is this little chat button here. You can press on it and there are two simple steps. Refresh the page and this page here before you press chat and then choose chat. Choose this, and as simple as that, it should work. Yesterday, for some reason, I failed to do that at some point when the chat came back. All right, so again, thanks a lot for joining in. I want to say hello to everyone. I hope everything is good. And we're going to get into the markets here. Not feeling very well today, so this may be a little bit shorter, but I'll be fully supporting you here. And so what I'm going to do is get right into the charts here. Let me see. And yes, and here we go. Should be able to see the charts on the screen here. Give me a yes. All right, so give me a yes if you can see that. You should be able to see that. And welcome Roland. I think we have other people coming in. Very well. All right, so I just want to very quickly mention the SP 500. On Monday we mentioned the possibility for this area to act as a response, as a support, and that's what happened. This was an area where potential participation of algos was possible, and actually, interestingly enough, can you see all this day of move lower or correction here? 1, 2, 3, 4, 5. And then 6, that was the last day where we had some prevalence of shorts on this market. Interestingly enough, if you look at the DAX 30, one of my students has actually sent me, I don't have it on this platform, I have it on the other platform, but interestingly enough, while the SP 500 has been correcting laterally here, the DAX 30, the German index, actually has moved lower here and went to trade to the equivalent of this trace here. Went to trade to the equivalent of the 1955. Okay, so that to say that some of the markets which are stronger might correct laterally, and you know that very, very well. Other markets might correct laterally, and this is a time correction. Other markets might have price correction, as we saw in the DAX. Interestingly enough, the DAX has offered the equivalent of this 1955, which was an extension on the DAX, has offered, excuse me, a great long opportunity. All right, so I think that was worth noticing. I also would like to do a little bit of a reality check and responsibility check here. Whenever I write something on FX Street, I try to capture potential behavior based on what we see in the markets. And when we get why I focus on the dollar index, you know it very, very well, because this market actually is very, very important, because obviously trades against the euro dollar, and that's the reason why you're seeing the euro dollar correcting now. And we will get to that in a minute, Todd. So bear with me here. Interestingly enough, this market has been pushed lower, and you know, there were two components that actually have pushed this price higher here. One was obviously the obvious weekly level long here, and the existence of this first target here. So with short people taking profits and added long participation from weeklies, that's what has produced this result here. Now, before we continue, let me just mention the fact that on Monday we said that obviously this market was a very important, in a very important area, and there were only two outcomes. One is that weekly do not show up, or the profit taking is not enough to propel this market higher. And I believe that profit taking wouldn't be any case enough in this specific case. And the other option was that this market would actually bounce, so drop or bounce. That's what I wrote in the in the review there. Okay, and if you go back and you see, you know, what we have provided in the analysis, that you will see that. All right, so now. So where this market can go now, and again, the reason why I want to study this market is because it has a direct influence on the euro dollar. Indeed, this market is around 60 to 64%. The dollar index is representing euro currency, so it is obvious for this market to mainly trade against the euro dollar, right? And the next level where we can see this market moving to is the 96.18. Now, we would need to know whether the weeklies will win the battle against the dailies here. All right, and our experience shows that typically the weeklies have a better the upper end. However, we have to be very careful here. This is a consolidation. Consolidation can be continuation, formation, or can be actually reversal and reversal. So we don't know it at the moment. What we know though is that this market is spinning lower lows, so we should be very careful. If this market has the strength to get into 96.18, I would actually look for resistance there for a continuation lower. Okay, and now if you have any questions in relation to this, you can write them down, and let's see how this is affecting some of the pairs. FX Ambassador is also proposing GY and GU, so I'll definitely do that. So I'll start from Todd's euro dollar and pound euro, I believe, and then I'll move to your pairs FX. So no worries about that. All right, so sorry for my tone today. It's not really happy and cheerful like I like to be, but please bear with me, and I promise I won't bring this tone again in the future. So this when we come to the euro dollar, then this move lower here that we saw on the daily here, it's actually a reflection of profit taking plus the move on the dollar index. Why profit taking? Because if you will remember, in the weeks before I left to Italy, K7, that's the best compliment I could get today, and probably for the week, and maybe even the month, because to me, I mean, if there is one thing I hate, is to hear someone talking about something interesting but without that tone, and I hate that. So I try to be cheerful, but this is who I am. So do you use AM and W formation when trading? That's an interesting question, Amfundo. Let me get to you just in a moment here. And all right, thanks, KA. So as you remember, in the past, before leaving, we actually modeled, mind, after the fact. In this specific case, not before the fact, and I will never say that I would be capable of capturing this level here after the fact. In fact, there was a whole discussion about how this move the day of the ECB skewed the picture in this market, right? So, however, after the fact, we recognized our participation with algos anchored to this 109.46, and that worked for us very, very well indeed. See, even if even when we saw this market reacting here, right, and we found this level here, look at what we had way before the fact. What did we have? We had the 114.35. What is that? That's a first target. Look at this beauty. You may say, okay, this is just a case. All right, I challenge you to do your own homework and try to trace these levels, and then you can come back to me. You know, you can always find me on FibStalker@gmail.com. Let me have your experience. All right, so what's the meaning of all this? Okay, the meaning of all this, that's as soon as this market has got into that first target, which is hawkishly looked by algos, you know, we could actually take profits there. And FX Basile suggestion, it's an A, B, C, D. Fair enough. I don't choose these formations. The reason why I like to use traces is because they model something realistic about this market. In fact, an A, B, C, D wouldn't give probably a target with such a position in this case. So clearly there was someone or something, or I believe there are some families of algos who are watching this level, 114.36, and to the pip, they actually took profits there. We can see that from that participation. All right. So why is this important? Because you know, if you will decide to learn anything more detailed about the way I look at a price, you will see that once we have these levels, we also have a potential for an understanding of what comes next. All right. So, and indeed, this level has been challenged, of course, but every time the market got into that level again, someone came in to take profits, and that's my interpretation. All right, until the dollar index the guys decided to push the dollar index, and it's interesting that this level, the 112.66 here, is being defended at this point. I don't know whether this is going to continue, but this is quite interesting because it gives us a lot of information. And let me give you a plan here for the euro dollar in the coming days. Okay, as you know, I always like to. I mean, if we are not able to, if our analysis does not serve as to prepare for what's coming next. So, what's the purpose of the analysis? All right. So. So there are two outcomes here. The most probable outcomes that I see at this stage is that this 112.66 is going to be pierced on the downside. All right, and this allows me to introduce the way I use M and W formation. If this level is broken on the downside and then the market rallies, I will be looking for entry shorts. Okay, in this market, I'm not going to trade this market long until this market gets into an area where the bulls have to show their attributes, and probably should not be talking like that, but the bulls have to show their hands, have to show that they really want to push this market higher. Now, incidentally, what I believe is that well, what I believe is not really important, right? Because the market can do anything. So what I believe, it's not important. However, I gave you a read here. I mean, if the market moves lower, it's a M for murder, as I call it, M fundo, and there is the opportunity, maybe even to get this price short at 140, 139 again. We don't know that. and then trying a stop to 111.43. Of course, the market can go much lower. We don't know that. That would also depend on the dollar index. But interestingly enough, I was trying to say before, and then I interrupted myself a number of times, is that the dollar index is indeed and the opposite, doing the opposite, right? So that level that I've showed you before, that is the potential continuation short on the dollar index, might correspond to the level where the the euro dollar will find support at that level. So to make a long story short here, if the euro dollar here gets into breaks this level, we might get, or not, we don't know that, but if we do, there's going to be a short, an opportunity to short this market in a 111, and that could correspond to a dollar index into that resistance area that I've showed you before. Remember that on the weekly time frame, we are still looking for longs in this market. Indeed, I believe, and my model suggests that the 122.30 level is the only area where we could find at this point sensible participation from weekly time frames on the downside. All right, so that's what I see in this market. And the other market was, so I'll do one from Todd and one from FX. So pound versus Japanese yen here. Let's look at this market. This market is apparently fiercely bouncing from within that area that we mentioned since a few weeks and now months back. So that's the area starting 156.40. And what we see here in this market is a reaction, and this market has been trading. I've not reviewed this market for a while here. I'm starting slowly. This market has traded into that second target there. So on the weekly time frame, we can use these trays as well that were internal moves, and the market has actually traded potentially into that second target. If that's the case, this market has to show, the weekly have to show their hand, and actually they have to bring this price much higher. Okay, so is this move ended here? No. If you're long FX, if you're long pound versus Japanese yen, I think 157.60 could be a good place where to take profits off. We are seeing a sequence of extensions on the 4-hour time frame here, so this market could keep moving higher here. All right, let me see if I can see. I've also another model I like to use. I use that for stocks, but sometimes it gives good information on on Forex as well. And yeah, I mean, we could see a correction here on the 4-hour time frame, but still, this market is pretty, it's pretty strong on the 4-hour time frame. That 156.80 could bring this price into a short value area, and then we could see that continuation there. All right, so hope this gives a little bit of. Any other questions in relation to this? So again, we have Kerry, Jake, Scott, Keg, Roland, FX Ambassador, and Fundo, AA, Marco, Pantelis, KE7, and Adinda here. So if you have any questions, just write them down. So I believe Todd was, no, it's not a long-term upward trend. So the question of K7 here, so is this a long upward trend? It is under some conditions, not yet. Weekly has to show that it has enough powder to push this price higher. and that will only come if 159, 157 it's pierced on the upside. So before we get there, we will need to test this area of potential short here. Okay, so that's not going to happen until we test this area and see what happens there. All right. However, yes, if it, see, everything is relative in the market KA7. Whenever you ask a question like that, it's kind of, there is an implicit assumption that we know what's going to happen in the future, and we never know. So I constantly test the market for levels that work. The good news is that more often than not, we know those levels well in advance, because we use a model that represents something fundamental about the market and represents some of the activities of algos, and we don't know in reality, smart money or banks or whoever is watching those levels. I've showed you an example from the euro dollar before, when I showed the first target that happened right at that high there. All right, so just to rephrase then, so do you think it's a long-term upward trend only if certain conditions are satisfied? And this would be probably the most reasonable answer you would get from people who are serious about trading. Okay. Okay, so you were looking at it as a possible reversal, correct? See, as I mentioned, and that was a great question actually, because it always allows, great question allows us to clarify. The point here is that, okay, let's look at the larger time frame is telling us that this market is on top of a weekly area of potential participation long. Before they can win, they have to beat the shorts. The shorts are waiting at 156, 57, 70, right? And we have some tools. I never blindly buy or sell these levels. We have a methodology called the FibStalker time, which is a procedural way to study the sequence of measured moves on the smaller time frame to see when they fail. Because when they fail, it means that in this specific case, for a short, if we're looking at this chart here, if the sequence of the moves on the smaller time frame is broken after there is participation from this area, this is clearly telling us, giving us information. Now the good news is that the FibStalker timing can also be used to time the market managing risk properly. So that's what I want to do all the times. Okay, so I hope that clarifies with my unhappy fake voice what I meant here. And let's continue here. Let's continue with if you have any other before I get into Todd's second market that he mentioned. Let me see. Was that I believe it was euro pound or something like that. I can't find it. Oh yes, it was, I don't know, what is it? All right, can it sit? Todd, if you can, euro pound. Okay, euro pound. Okay, before I get into that, let's cheer a little bit here with Craig as well and myself on on silver here. And this market has continued moving higher here. I didn't know whether this market will move, with which volume it will move higher, but we had a clear setup, and we discussed this setup in the past sessions as well. And we have a first target at 1660 here, and I believe we can make that first target probably this week. I believe at this point there are some previous signs here. We're gonna probably wrestle with them a little bit. This week 4% stronger. Okay, I mean that's Craig, is what we were anticipating, right? Because we always say that silver had to do some catch-up work on gold, and apparently it is doing it. So very happy about it because I have quite a sizable position long here. So, and I think Craig is also interested in longs. So, okay, so euro pound here, euro pound. So euro pound um, has been trading in a sequence of shorts here, and I'm still correct, Craig. Okay, so all right, so as you can see here, if we were looking for confirmation of that level that was tested before, or 78.70, we saw that that level produced quite a number of risk-free trades there. Well, actually two of them, 1 and 2. Okay, excuse me. Anyway, it produces a move lower. However, now we are pretty sure that this market has to keep moving higher. Okay, so despite the move we are seeing here, this market is still in an up move, and we can see that clearly on the weekly time frame. And before I continue, how long do you keep your trades? If you don't mind me asking, I don't mind you asking. K7, it depends on the time frame I take them, and the instrument and the purpose as well. Now, when we talk about this silver trade here, this is a swing trade, and I will keep part of it as for a long-term move, because if the dollar index start moving lower, we might see this market appreciating. Now, that said, though, that's not guaranteed. But provided that we have a risk-free trade at some point, our risk is very, very limited. Of course, the market can always get below our entry point even after a risk-free trade is provided. So in this specific case, I'm looking for the moon. I'm looking for $50 actually. We will not get there, or I don't know if we're going to get there. And I'll keep trading swings like this one and take portion to 160. Specifically for Forex, I actually trade and time on the 15, on the 1 minute. So my trades can be 1 day to 5 days, 4 or 5 days, depending. Sometimes, occasionally, on a big move, I can keep a position for multiple weeks. Okay, so it really depends. On the future, it's basically scalping, so exiting after a few, depending, I can use the 1 minute or the 5 minutes, it depends. Could be, a 1 hour or so. Okay. Yes, do you take part of the position out at first target? Yes. I take part of the position out at target 0, which is risk-free, and then some more at first target, because there is no need to give back profits to the market, and I'm not greedy. Once you can do 1, 2, 4 or 5% per week, I think you can be very happy, and certainly that level of objectives, is satisfying for me. Of course, you might have different objectives in your trading, but that's what I'm looking for. Okay, so sometimes it goes much better, sometimes it doesn't, but overall, we attempt to increase our account every 3 months. Okay, so as I was saying, sorry for the digression here. Let me do a quick time check. So let's go back to the euro pound. I have no reasons to believe that this market is in jeopardy here. Now, what could happen here is that we can get sensitive. Sorry, the long trend is not in jeopardy. Okay, when I say long trend, I say the weekly long trend. All right, so you always have to keep all the time frames in mind, and at the end we do all this analysis so that we can actually put all this information together and come with a trade that we might be interested into. So there are two levels here on the weekly that I see, and these are part of the model, and one level is a 90% retracing to 177.66 for a continuation higher. And I don't look anything special into it. You know, I don't see a potential um, potential head and shoulder here or anything like that. That's not the way I trade. I look at these kind of things. The other level where this market could actually find participation is on the long side, of course, is 78.32. Sorry, 78.80 area, 90 area here. Now, interestingly enough, I think that if this market breaks 78.32 and never traces, that's going to be a short for me. Okay, and I suggest it's a short for you as well. What is the probability of reaching the second target? Well, that depends. We don't know whether the market is, depending on how the market is moving. If it's moving in traditional measure move or in extension measure move, is a different probability. I don't have these figures, and you know, it is not safe for me. Well, I rarely you know, keep a trade to the second target actually, unless it's a long-term trade. Okay, so I don't have those figures, and um, you know, it's, I consider unsafe to bring price to the second target. So you can do that, of course. One good way, if you have a strong reason for that, would be to take some partial profits on the first target and then let the remaining attempt into the second target. However, these questions a very much depends on what is around price, right? Because if I'm looking at if I'm looking at a setup on the daily time frame, and then during the analysis on the weekly time frame, I discovered there is an area of resistance in a long, I will need to adjust that target to account for the resistance on the weekly. That is going to certainly, or most probably, stop that move higher. Okay, so it is when you look at price through different time frames, there is so much information that you have to put together. I mean, it's not really a lot of information, but there are some considerations you have to do, and you really have to keep all the time frames in mind. So it's very difficult sometimes to and it wouldn't really make sense to give a probability only based on a setup on a single time frame, because that probability can change depending on what's happening on the other time frames. And that's one of the reasons I don't have these figures, and it's very difficult, and it's maybe not even meaningful to try to measure that. Okay, because I don't want to get an approach which is pure statistical, like when you use indicators, pure statistics. No, I want to get an approach where I know there are some levels that are hawkishly watched by professional banks, algos, you name it, and I want to test all the times how the market behaves at those levels. Okay, so I hope that clarifies. Great question. I'm not capable of answering that. Todd, I'm shorting from the first hour time frame. Okay, so Todd, I mean, you know the two levels you have to watch here: 78.88 and 77.66. Below 78.32, and it bounces a short. It could be an opportunity for you to add to your trade into 77.66. I wouldn't try my luck below that level. 76.66, I wouldn't do that. All right. So see, I mean, when I comment these markets, I'm also trying to give you some trading plans. I mean, in the coming days, we might not review this, but again, if the market gets below this level and rallies, and that's the trick. How do I get the end of the rally? Where the rally ends? It can end at the 50%. It can end above it. It can end near the high, above the high. There are ways to study the sequences in the smaller time frame to do just that. Very well. I'm happy for that, Craig. All right. I want to cover before we go, as I promised. I'm not sure we can do the US dollar Japanese yen AA, but my suggestion is that you go back to yesterday review. If you have not seen that, I suggest you do. And yesterday we mentioned this 109.35. Actually, we mentioned it, I believe, yesterday or 2 days ago as well. The market is right there, still moving in extension long on the 4-hour time frames. Be very, very careful. We need to break the 109.02 for the shorts to resume here. All right, very quick there. And then I want to conclude with the pound versus the US dollar, I believe. That was the other one. Yes. All right. So this market here, it's actually moving, as you know, in a sequence of measure move shorts on the weekly, and very hugely technical market. Beautiful profit taking when the market came into that first target. Look at this beauty. The next week, some profit taking came in, and now the problem is that this market is moving laterally on this time frame. Okay, so lateral moves are always either inversion or continuation move. If it's an inversion move and you have longs from lower levels, by no means there's no need to panic at this stage. If you have longs, these longs could be brought to 148.87. However, this is what the weekly time frame is telling us. Okay, only the weekly time frame is telling us. K7 very quickly here. I was wondering whether you think the US dollar Japanese yen would hit 110. So I mentioned on the weekly two levels, the 109.35 and the 111.25. We did not analyze the daily. On the daily, there are two. So there is one more level which is not shown here. That's the 50% retrace from the previous high. Okay, and if this market continues strong, that's the level. It's 110.70. All right, K7. So I will continue and conclude on the US dollar. So the lateral move here can be very quickly, very briefly, and clearly seen here. I have a pattern in my trading, which I teach also in the coaching program, and it is the FibStalker sideways pattern that tells us what can happen after the market, when the market enters a sideways activity, and when and how this can be resolved. And this market is clearly showing that it's moving laterally. Okay, so 141, it's an important level you have to keep looking at, and this market could continue moving towards two different levels here, and longs should definitely look at what's going to happen 141.40. All right, so 7:44. I'm going to start a quick summary for this video right now. And we started with the SP500, which is not what you see here on the screen, but this is the SP500. We mentioned the fact that this market could rally from this value area. We mentioned that on Monday. We had 2 days price today printing new highs. We know that we have a target 2089. I wrote that in yesterday article as well. Every day I read an article after this show, so you might want to review that as well to fix some of the levels of some of the markets we review. I'm not sure I'm going to write it today. And so this is the target. If we get to this target, the market would go to previous size. Interestingly enough, while the SP 500 has corrected laterally, the DAX 30, German DAX 30, has actually came to the equivalent of this trace 1955. All right. We then review the dollar index, and as we mentioned in the past, this market, we mentioned 2 days ago that this market was at an important level where a decision had to be made. And the decision is very, very clear here. Shows clearly on the weekly, even better on the daily here. So if this market continues higher, I think Desi can answer that question, but typically you look for Giuseppe Basile, which is my name, and on FX Street, and in Fundo, if you don't know about my work, you can find also a lot of webinars. A lot of them are free webinars, and you can review most of the concepts that, some of the concepts that I I show in this. And just look for that on FS Street, and you will find them. If you don't find them, I don't know what's going on with the new website, but that would be on the new website, so don't worry about that. All right, so after that, we had a quick look at, so what we said here is that this market could continue higher into 96.65. That would actually bring the US dollar lower into 111.43. Any break of 112.66 followed by a rally is going to be a selling opportunity. We then reviewed the pound versus Japanese yen, and we mentioned the fact that this market is moving higher due to participation on weekly time frames into potentially 157.68. You're very welcome on fund above 159.16. That's a confirmation that weeklies are in charge. And then we reviewed the euro versus pound. We mentioned that this market is still in long. The articles now show on beta.fstreet.com, as kindly Daisy is suggesting that. So please go on the website, and you should be able to see the articles as well. I don't know if you can see the older articles as well, but eventually you should be able to see them. And I'm not sure what's going to happen with the webinars, the past webinars with the new beta, but FSSheet is gonna tell you and us, so don't worry about that. So pound versus euro versus pound, here there are two levels we have to watch. The weekly still intact, weekly upwards still intact. The daily is in a correction, very interesting market. A few things may happen here. If you're short, keep your shorts and test for 78.90 and then eventually 77.60. All right. Thanks a lot. Thanks a lot, Daisy, for that. And finally, we reviewed the pound versus US dollar, and we mentioned this market is reacting to profit taking on the weekly shorts, and is moving laterally at the moment. And 141.40, it's a very important level to watch. All right, so I hope, despite my my voice, this this was useful. I'm sure it was for me, and I hope it was for you as well. And in the coming days, if you will come in or will continue the analysis, this is Sunday to Thursday show. It is important for me because I use part of this show to review these charts as well, and then prepare for the Tokyo Open, which is actually right now. Right, so thanks a lot for being here. I hope this was interesting. If you are interested and you want to learn more about how I look at price here, I want to remind you that I'm going to run the 4 session of the FibStalker Methods coaching program, which is a 12-month coaching program. It's a series endeavor and effort if you're serious about trading. I teach the mechanics of trading and risk management. I will provide all the models that are used to model price, and then I have a synthesis in 7 trading system of all these models that give you a way to reproduce the results. It's a full, a complete methodology, as well as a process to install, to create profitability and install consistency with a program with individual attention. So if you are interested, drop me an email or press the button on top of the page. There should be a box on the old website, and you can get more information there. All right. So thanks a lot for being here, and I'll see you tomorrow. Happy trading. Bye bye now.